And thanks for staying with us, everyone. First up, President John Mahama has ruled out starting discussions to extend Ghana's program with the IMF. It follows an earlier disclosure by the Finance Minister, Dr. Kassia Olatufor, that Ghana could seek an extension when the fund program ends in May next year, as well as fresh funding. But speaking to Bloomberg News in Munich, Germany, the president said that is not the plan, at least for now.
Happily, we have just had a staff visit, and so our Ministry of Finance is engaging with the IMF. There were few issues. We were not at the table when this agreement was drawn up, and so coming into government, there are a few issues that we thought we should raise with the IMF, including the issue of tax rationalization, because of the target of achieving 24% revenue to GDP by 2028. The program required that revenue should continue increasing at a certain rate. Unfortunately, what the previous government had done was just to slap on more taxes. And we had gotten to a stage where the more taxes that were put on, the less revenue that came in. And so it's necessary for us to look at the whole tax handle, rationalize them, make them more transparent, easy to understand, so that we can have better compliance. We've had that discussion with the IMF, and the IMF have agreed to provide technical assistance for us to do that rationalization.
So engagements have already started. Have you talked potentially about the program ending in May of 2026 being extended, or an additional program being added on?
We've not talked about an extension of the program. We are determined to continue with this program. I think that it means that we must be more prudent in our handling of our finances. We must also look on the expenditure side and see how we can cut waste and also shift resources to more priority programs. And so it's a whole basket that we're looking at. We also have the issue of the debt restructuring and the humps that have been created. This year, we have to pay in excess of 15 billion on the domestic debt exchange. So what we've done is to reactivate the sinking fund and put more resources into it to take care of the repayments that have to be made this year. But all in all, we have a cordial relation with the IMF. The next review, which will be the fourth review, is due in April. But before that, we'll present the budget in March. And so the budget will take into focus some of the issues that have come out from the staff mission. We're hoping to receive the aid memoir today or tomorrow, and looking at the issues that IMF raises, we'll incorporate them in the budget.
I see. And so you don't want any additional funds from the IMF? That is off the table?
Well, it's not off the table. I guess that it's a journey we just started. We've had a good discussion, and if it's necessary to look at additional funds or to extend the program, we'll look at it. But for now, we're determined to continue on this trajectory.
All right, President Mahama there speaking with Bloomberg News. Professor Patrick Asuming is an economist. He joins me on Zoom to make sense of all that we have heard. Good afternoon to you. So no plans to extend the IMF program, at least for now, Prof. The president says. Good idea?
Good afternoon to viewers, and thanks for having me. Well, I think from his point of view, that's what he has to communicate. You have to remember that we are just over halfway through the program, and therefore, when you are just about halfway, it's probably not a very good strategy to say we are going to seek an extension. But when you look at the program performance, even though the IMF will say it's been strong, and you look at how we've restructured our debt, you get a sense that an extension looks inevitable. I think even though the president might not be communicating that now, that's what you expect. But if you look at the debt obligations that are going to fall due, especially starting from 2026. Well, in the first 1.5 years, I don't think we did enough to put ourselves in a position to comfortably resume the debt servicing in full. The current government has just about 1.5 years to do that. I don't think it will be enough. And if you look at some of the important structural reforms and governance reforms, we haven't made the progress that is required. And the last thing we want to do is to rush to exit the program when we haven't done what we are supposed to do. That's what happened with the IMF number 16. We were in a hurry to exit the program, and not long after we exited, our problems came back. So I think I'm sure the president will think carefully about it before he makes a decision that it's time for us to exit.
Well, he talks though about refining the IMF bailout package. Top of your mind, what would that entail? And he does not rule out fresh funding or additional funding, if you like.
Well, I think that he did provide details, and it's something that we have seen from the way the NDC wrote their manifesto. I think one part he spoke about is the tax rationalization. I think it's something that I'm very supportive of, in that the previous government focused too much on generating new revenue in a very strange way by imposing new taxes. And when he speaks about tax rationalization, my interpretation is that we need to expand the base and improve the collection and then overall tax administration so that we will be able to collect taxes in a more sustainable way rather than simply bringing new tax handles, which really was not a great thing we did before. So I think that's an important part. Obviously, when the budget is ready, we begin to see a lot more details about what this rationalization is. And then the other thing is whether they are making any adjustment in terms of, for the consolidation, in terms of government spending. It appears that the president is going to stick with his promise to reduce the number of ministers. We wait to see whether the other appointees will also be reduced. Then we see what other changes, and recently we've also heard him saying they are going to do something to reduce expenses on traveling, official travel. So all of those might bring some small savings, and that gives room for you to change the emphasis. Don't forget the previous government completely wanted to focus mostly on revenues, and revenues by imposing new taxes. So let's see. When the budget is ready, we begin to see details that we put. But I think any idea about tax rationalization to improve collection, to reduce some of the inefficiencies, to roll back some of the exemptions, and then probably to broaden the base is something that you always work on.
Yeah, I think that, the president said the IMF visiting team bought into that. And so we are just going to see how that unfolds when the 2025 budget is presented. But for the skeptics, those who disapprove of the tax reforms, if you like, they feel that not every tax should go off. For instance, some feel the betting tax should still be there. Some feel, well, the e-levy, well, you could take it out. What's your thoughts on that?
Well, I think that if the e-levy could go tomorrow, absolutely. I think the e-levy of all those proposed taxes, I think the e-levy is the worst. I haven't seen a worse tax than that in our country. I think, taxing a method of payment is just completely unacceptable. Now, and I'm also one of the people who support that the betting tax should be retained. I think.
But that was a major campaign promise.
I know. I think because it's something that a politician says on a political platform. So, as an academic, I can afford to say I disagree. But seriously, I think for me, my issue with the betting taxes is not really from a revenue consideration. I think we have to begin to look broadly as whether we really want a lot of young people to be taken hold by betting. I think that's my only reservation about removing the betting taxes. But otherwise, I think the other taxes, the emissions levy, is something that is worth removing. The COVID-19 levy, well, we will see. I think, the ability to remove these taxes comes out with what gains the rationalization will give us. Mm-hmm. The more we're able to rope in from improving collection, for instance, the more the government has room to remove some of the taxes that it has promised to remove.
I mean, talk about collection. You mentioned that we're going to make some small savings. Now, we also have a debt situation. The president talked about creating a sinking fund. And question this morning with my colleagues, where are we going to get the money for the sinking fund? I mean, how much are we really going to make from revenue collection? What's the strategy going forward?
Well, I mean, my understanding of what went into the sinking fund were really some, a big part of the mineral investment fund and some other investment that we've made. You can think about if the gold board that has been established helps us to generate more from gold, then perhaps we could put more in the investment fund. But my understanding is that the investment fund comes in when you're in trouble, and we are currently in trouble. So why should you go and put the money in the investment fund when we should rather be using it to pay off the debt? So that when times are better, then you start putting more into the investment fund. That's my understanding. Not that I'm not saying I'm against the idea, but I think,
well, we're just wondering, is there a realistic approach? I mean, I don't know.
No, so I think that the sinking fund, well, it's a good fund to have in good times. I think when you review how a sinking fund works, you say, well, at this point, if the economy is strong and more resilient to shocks, then it diminishes the importance of the sinking fund. The sinking fund comes in when you get into times of trouble. Now, if your economy is more resilient, even when times are not so great, ability to withstand shocks will minimize how much damage those external shocks will cause. But, I think even if you reactivate it, I think more funds should be going in when times are good than currently that, we are in a bit of trouble.
All right. Great stuff. Good perspective. Always appreciate you on this program. Professor Patrick Asuming, thank you so much. Have a good afternoon.
Yeah.
All right, you're watching The Marketplace. We still stick with IMF issues because Ghana is now set for the 4th review under the IMF program. You heard the president say that will be in April this year. The IMF team concluded the 5-day country visit last week. Here's more in the following report.
Known as the 4th review, the IMF will be trying to establish whether Ghana has been able to meet those key targets established under the fund program for a certain period. If Ghana is able to pass this test, this will then lead to the IMF board approving some funds that will be disbursed later to the Bank of Ghana, possible in June this year, to support government program identified in the 2025 budget. Joy Business understands that the IMF will be using fiscal data ending December 2025 to carry out the assessment when the IMF mission returns to Ghana again. Based on their recent visit, which ended last Friday, the IMF has been able to make some input into the 2025 budget. However, we understand that there are still some concerns about Ghana's rising energy sector debt and our fiscal situation.
Well, this afternoon, we also keep an eye on fuel prices. Prices of petroleum products are expected to witness a marginal reduction today at the pumps. This is based on internal pricing data that guides the quotes of oil marketing companies. George Afe has more in this report.
Based on the data, petrol is likely to be sold at 15 Ghana cedis 70 pesos, or maybe 15 Ghana cedis 90 pesos per litre, representing a 1% reduction from the previous price quotes some 2 weeks ago. Diesel, on the other hand, should go down by 2.2% and is likely to be sold at around 15 Ghana cedis 85 pesos. LPG for the first time this year should go down marginally and it should be sold at around 18 Ghana cedis 10 pesos per kilogram. The reduction has been influenced by declining prices of crude oil on the international market and the significant reduction in the rate or depreciation of the Ghana cedi against the US dollar over the past 3 weeks.
You're watching The Marketplace. We are taking a short break. When we come back, we'll have your financial market updates. Don't go anywhere. All right, time to take a look at the financial markets. Demand for treasury bills reached its highest level in recent times as the government recorded more than 117% oversubscription of the short-term instruments. According to the auction results by the Bank of Ghana, interest rates plummeted for the third consecutive week. Joining me is Head of Trading at Republic Securities, Patrick Edem Agama. Good afternoon to you, Patrick. I don't know if we've had a conversation this year, but if not, Happy New Year to you. Feels weird to say it in February. But how did the auction go last Friday?
Well, on the money market, we noticed that the government exceeded its targets, and investors also bidded 17.7 billion against a target of 8 billion. We noticed that the government accepted about 9.4 billion, which exceeded by 16.9%. This amount was also about 17% higher than the obligation that's set for today. We noticed also that the 91-day decreased by 112 basis points to close at 26.86%. The 182-day also closed at 27.81%, decreasing by 87 basis points. And then the 364-day also decreased by 129 basis points to close at 29.07. Now, the interesting thing is the bid range. If you look at the bid range for the 91-day, investors bidded as low as 23.6% interest rates. And this is just some few basis points higher than the inflation rate of 23.5. So it's a bit interesting how low investors are willing to bid just to be successful at these auctions.
Yeah, that's interesting. So what should we read into the high demand for treasury bills by these investors as interest rates plummet?
Well, we are seeing that the confidence level is shooting up in the money market. Secondary market is even a bit more hostile, where the rates are really low, the bills are not being seen or are being liquid in the secondary market. But we see this hike in bids is showing confidence level increasing.
What's triggering this confidence, do you think?
Well, we can attribute it to maybe new government, new finance ministry. But, we all know the needs of the government. We know there are a huge amount of money is coming in the near future for government to settle. So, and also we know there's likelihood of e-levy and other sources going off the table. So it's a bit something we are understanding. We are trying to study and see why this trend is continuing, and we expect it to continue in the coming auction on Friday.
Well, that sounds good. The buzz is not only with the treasury market, but on the stock market as well. I mean, last week we reported that the total value of shares traded on the stock market witnessed significant increase. That's like 200%. What's driving the activity we are seeing? New government?
Again, confidence is high. We can see that 7 weeks into the new year, the Ghana composite, the GSE composite index is 9.47%. We have stocks like ETI and MTN already approaching the 50% in terms of year-to-date performance. So that's a huge influence we are seeing. For last week like this, we saw about 9 stocks gaining in share price: Stanchart, Access Bank, SIC, Carl, ETI, Bob, New Code, MTN, and GCB gaining share price. And we saw no laggard in the market last week. The financial stock index also is actually recording 7.83% gain in terms of year to date. It's interesting times. Investors are taking positions, fund managers are also taking positions, and I think this is just interesting. We hope this trend in the stock market continues. Definitely, if interest rates in the money market drops, as we are predicting, we think investors will start looking more at the stocks, and then that will shoot up more.
Well, fingers crossed. But this week we've got our eyes on the banking stocks as well. Car Bank tipped to record some gains because of a surge in demand for those shares. What are you looking at this week?
Yeah, for this week, yes, we expect demand to keep mounting for stocks like Car, Stanchart, ETI, and then MTN. We've already seen that the offer side of MTN is almost hitting 3 cities. The possibility that it can close at that level by the end of the week is really high. So we are seeing interest in these stocks, these banking stocks also picking up because there's a perception coming in to the market that the banks will start paying dividends very soon because they're almost at the end of their maybe the embargo that was placed by the BOG. So if this falls in place and there are no restructuring worries, they should be able to make profits and pay dividends, and that's what investors in this market look at.
All right, thank you, Patrick. Good to see you, Head of Trading at Republic Securities, Patrick Edem-Agama. Appreciate your time. That's the marketplace. There is more news on our website, myjoyonline.com/business. New CIMG President targets membership increases as part of Agenda 55 initiative. Also, prices of petrol, diesel to go down, LPG to remain unchanged according to the IES. More stories on our website, myjoyonline.com/business. Enjoy the rest of the day.